Hi, welcome to America First Wealth Management Investment Outlook for Monday, April 21st, 2025. My name is Dan Lew. I'm the Chief Investment Officer and Portfolio Manager at America First Wealth Management. Turning to our disclaimer, this material is just intended for information purposes. We're not offering or soliciting to purchase or sell any securities. These are opinions as of today, April 21st, and are subject to change without notice. Our market highlights for the abbreviated week last week. We had 4 days. The markets were closed on Friday, Good Friday. Major market indices declined. S&P 500 fell 1.5%. Dow Jones dropped 2.7%, and the Nasdaq Composite lost 2.6%. And that reversed the gains that we saw during the previous week. Couple of highlights we wanted to point out. United Healthcare had a sharp drop after they issued a disappointing profit forecast due to higher than expected care costs. Shares dropped 22.4%, worst drop for United Healthcare since 1998. And that decline certainly had a drag on the Dow Jones Industrial Average. Eli Lilly surged on drug trial results. The stock rose 14.3%, following promising results from a clinical trial of their oral weight loss treatment of orforglipron, which showed significant weight loss and blood sugar reduction in type 2 diabetes patients. The tech sector was pressured by trade restrictions. NVIDIA, the bellwether largest tech stock, one of the largest tech stocks in the market, dropped 7% after the company announced a $5.5 billion charge due to new U.S. export restrictions on AI chips to China. And that was a large drag on the entire tech sector, obviously. The Federal Reserve policy was certainly a volatility causer. Fed Chairman Powell indicated that tariffs could lead to persistent inflation and suggested that the Fed would hold interest rate adjustments for a prolonged basis. President Trump criticized Powell for not lowering interest rates, adding to investor uncertainty. And clearly, during the weekend, there was a lot of debate about whether or not the Federal Reserve was choosing sides politically, because, as we're quite aware, the Fed did lower rates in September just prior to the elections after very strong economic data. So that certainly raised a question mark. A lot of debate over the weekend about that. In terms of our market outlook, earnings are in focus this week. A lot of the S&P 500 companies are reporting earnings, including Tesla, Alphabet, Boeing, Intel, and GE Aerospace. These are certainly going to impact the market direction this week. We continue to have a lot of trade policy uncertainty. Ongoing concerns about the tariffs continue to pressure investor sentiment, despite a temporary 90-day pause. And we're looking to see if there's any indications of negotiations with the countries that have sent delegations to DC. Key economic data also this week. We've got the April flash PMIs on Wednesday, durable goods orders, new home sales, and the Michigan Consumer Sentiment Index on Friday. Got some Fed speeches by Waller and Kashkari, and we're going to look for some rate policy clues given concerns about inflation and trade issues. On the technical front, the S&P 500 has key support near 4850 with resistance around 5500. However, earnings and trade headlines certainly could drive moves in either direction. Also, we're focusing on gold as we're now at record highs in gold prices, and we've recently seen some $100 plus per ounce daily moves. And historically, these have always been indicators of very high volatility, political and geopolitical turmoil or economic turmoil. Two of the major gold miners are reporting this week, Newmont and Agnico Eagle. Newmont, as many are aware, is the only gold mining stock in the S&P 500. So that could see some investor interest. Um, okay, sorry, this slide is dated. This is last week, so we're going to skip that. Um, Weekly market stats, as we indicated for the abbreviated week. Dow Jones was down 2.7%, S&P down 1.5%, Nasdaq down 64 basis points. Running down the list, small caps, Russell 2000 were up 1.1%. Saw some large cap growth stocks, 1000 value up 1.65%. Small growth, small value were up strongly. International stocks as measured by EFA was the strong highlight of the week, up 5.27%. And bonds rallied back a little bit as 10-year bond yields dropped slightly. The core US bond index is up 75 basis points. For the month to date, quarter to date, and year to date, we're still seeing a lot of red, as you can see in the table here, with the only positive highlights year to date being international stocks up 7.26% and bonds up just under 2%. And you can clearly see that growth names um, measured by NASDAQ and the growth indices and small caps are down double digits. So tough year so far for stocks. Good year to be diversified into international and to bonds. Turning to Magnificent Seven names, which we've been tracking for a while now, Apple was the only highlight of the week, up 3.45%. Meta was the biggest underperformer, down 8.2%. NVIDIA, despite its big single down day, it was the second worst performer of the Magnificent Seven, down 5.65%. And the month-to-date, quarter-to-date, and year-to-date numbers here are shown. Not a good look on the Mag 7 names year-to-date. Many down double digits, a couple down 20% year-to-date, and Tesla down over 40% year-to-date. The sector performance leadership was seen among the energy names, real estate, materials, and consumer staples and utilities. Um, and we had a drag on the consumer discretionary names and tech sector, and communication services also down a little bit. Looks like it's a bit of a stock picker year with some sectors showing some green and many, although showing red. Being defensive clearly year to date has been a good place to be with leadership among the consumer staples names and utility stocks. Looking at the S&P 500 chart, for the last 1 year period, we highlight the drop from the peak to trough. For the last year, we're down about just under 19% from peak to trough with a strong bounce off of that bottom. The trend, though, is still weak, as we can see in a 10-day moving average. We've been following that down. The RSI had gotten to extremely oversold where we saw that bounce. So we have the bounce. RSI has recovered a bit. Clearly not oversold anymore, but not overbought either. So room for improvement technically, but the trend still looks to be out of favor. As we mentioned, we'll be focusing on earnings and some macro data this week and the tariff data talks as they continue. US dollar seems to be breaking down. This is a 3-year chart. We're now below the 3-year low in the dollar, and the dollar is looking weak versus all major currencies. It is, however, in the oversold range, as indicated by the RSI. So bounce back would not be technically out of question, but right now given the turmoil, the dollar is clearly under pressure. Turning to gold, which has we've highlighted has been quite strong and continues to be um, actually accelerating to the upside here. We are oversold according to the RSI, but that has not caused any dramatic pullback in gold. And we did see a recent pullback in April, but that was clearly an opportunity to buy, given the geopolitical economic turmoil that's occurring. Gold appears to be a safe haven asset. We do know China is buying gold pretty heavily. Central banks are buying gold and turning back to China with the drops in their stock market and real estate. Gold seems to be the safe haven asset of choice. Looking at Bitcoin, which we put up because we do wonder if it's going to be a safe haven asset for modern times. It's clearly held up, kind of hugging the 200-day moving average, and does seem to be turning up here. And given some of um, the discussions by the Trump administration about creating a cryptocurrency reserve, including Bitcoin, that's lending some support to Bitcoin. However, we do note that Bitcoin is, although it's up, it is underperforming gold, as gold is clearly the safe haven asset of choice for a longer period of time, and Bitcoin being a more modern digital asset. Turning to Treasury yields, we did have a reduction in 10-year interest rates for the shortened week, down 14 basis points, closing on Thursday at 4.34%. And year to date, down 28 basis points. So nice to see a little relief in terms of Treasury yields. But as we can see, the 10-day moving average is clearly uh, swinging to the upside. So um, we do need 10-year yields to drop and some relief in terms of liquidity. But given the comments by Powell, that's not coming at the short end from the Federal Reserve, probably for some time. Turning to the yield curve, on the blue line is, I'm sorry, we have an incorrect chart here. We are hoping to put the April 17 numbers, but we don't have that. So I'm going to skip this for now because this chart is not updated. Be very close to the blue line, but we'll come back next week with an update. Sorry about that. Turning to the economic calendar, um, we've got um, the key events of the week. Tuesday, 9:30, Fed Governor Harker's speech, 9:30 a.m. Got Kashkari at 2 p.m. Got crude oil stock change at 4:30. And that'll be interesting because energy has been a highlight sector performer for the last week. So watching what happens to crude oil stock changes will be important. On Wednesday, um, we've got uh, a Fed governor speeches, 9 o'clock. We've got the composite PMI flash for S&P Global and manufacturing and services. Got new home sales at 10 o'clock and EIA crude and gasoline stock changes. On Thursday, durable goods orders month over month at 8:30 a.m. Existing home sales 10 o'clock. And on Friday, Michigan consumer sentiment S&P 500 earnings. We've got quite a few occurring this week, so we don't have time to run through all of them, but I'll put these up, and if any of our viewers would like a copy of this presentation to get this data, we'll be happy to send it. Just reach out to us. This Tuesday, got Tesla reporting after the close. That'll be a key one to watch. Tesla's down over 40% year to date. And certainly Elon Musk's involvement with Doge and the Trump administration has clearly not helped his stock. We do note that Elon Musk's employment as a government employee is only temporary. Um, that should end sometime in May. So if he does decide to leave the government, that could be bullish for the stock as he refocuses on being a businessman versus being involved with the government. The Wednesdays, got Boeing. Boeing's a highlight stock given that China has canceled their orders for Boeing planes. Be interesting to see what Boeing says about that and what type of impact that's going to have to their um, to their growth going forward. Wednesday after close, quite a few after close as well. Newmont is reporting, as we pointed out, the largest gold mining company. We'll be watching that one very carefully. And on Thursday, quite a few names as well. Another big miner, Freeport-McMoRan, is reporting. Um, we're watching that one closely as well. And then after the close, got Amazon reporting sometime as well. That's a key bellwether for consumer spending. And for ending up the week on Friday, these are lists of the stocks that are reporting. And we are sad to report that Pope Francis passed away this morning uh, after celebrating Easter Mass. And we bid the Pope a fond farewell and thank him for his services. And for more information to learn about our products and services, or to get a copy of this presentation if you like, please email me or Jim Monahan. Our emails are shown here. So thanks for tuning in. These are obviously interesting and volatile times. And as we had predicted earlier in the year that the strong performance of the past 2 years was unlikely to repeat given the changes that were afoot, and they're clearly happening. We're staying on top of the news and reporting it to our investors and trying to be positioned in the right areas and providing these weekly updates. So thank you for tuning in and have a great week, and we'll talk to you again next week. Bye bye.